Welcome to your second quarterly update for 2022. This is covering the period from January 1st to June 30th of this year. We want to cover portfolio performance, public versus private REITs, and the next big investment in your accounts. As far as performance goes, portfolios have been doing very well relative to the market. So when we look at the broader stock market, fixed income or bonds are down 12.4% so far this year. When we look at equities in Canada, down 9.87% this year, in the US down 19.11%, and broad international indexes down 10.55%. When we look at our client portfolios, the fixed income are down about 5.71%, so about half of what the market is. Equities down 6.36%, so they're only down about half of what the broader markets are. That's just thanks to we have more focus on low volatility equities and also broadly diversified. And the third part of the portfolio that's performing the best this year is the private investments. They're positive 1.41%. And a lot of that positive performance in the private portion of the portfolio is being driven by real estate, the private real estate investments. So on this next slide, I'm just going through kind of a difference in performance in public real estate versus private real estate. So the biggest public REIT in Canada is Canadian Apartment REIT, car.un.to. It's negative 24.18% so far this year. And over the past 3 years, it has negative performance. So it's performing more like the broader stock market than an actual basket of real estate because as we all know, real estate has had a very strong market over the past few years. Now, our private real estate is performing like actual real estate. Centurion Apartment REIT is up 9.29%, Avenue Apartment REIT up 5.79%, Mini Mall Storage REIT up 5.8%, and they've all had strong positive performance for the past 3 years and for as long as we've held them in our client accounts. So we're very happy to be participating in the private real estate market as to the public real estate market, which is experiencing a significant amount of volatility. Now, one other thing that we want to do to minimize volatility in accounts is add FIRA Infrastructure Fund. Now, this one can only be added to non-registered investment accounts, so it can't be added to everybody's account, but what it invests in are more recession-proof type assets, investments that can perform well regardless of what's happening in the economy. So hospitals, renewable energy, ferries, toll roads, bridges, tunnels. There's a list of the assets in the bottom corner of the screen that FIRA Infrastructure Fund either directly owns or has a partnership stake in. So far this year, it's up 2.17%. They're targeting about an 8% per year return, with 5% of that as a distribution. And the distribution is return of capital, so it's very, very tax efficient for your non-registered investment accounts. And those are the main updates that we have for you today. We're going to touch base again with another video at the end of the next quarter. And in the meantime, if you have any questions specific to your portfolio, send us an email, give us a call, and we'll set up a time to speak with you. Take good care and enjoy the rest of your summer.